Coming up, the SpaceX IPO lands, the Australian share market falls, and shares in Rio Tinto and BHP slide. We'll have the details next. Hi everyone, welcome to the SBS on the Money podcast for this Thursday, the 4th of June 2026, a day where the Australian share market fell by 1.1%. We'll have the details soon with Robert Talevski from Activam Group. But first, Elon Musk has unveiled the details of his potential record-breaking IPO of his communications, AI and space exploration company SpaceX, and it is being offered to Australian retail investors. He's planning to sell around 555 million shares at $135 each, raising $75 billion. And at that price, it would give it a market cap of around 1.77 trillion US, catapulting it into the top 10 largest listed American companies. But remember, last year it reported a near $5 billion loss on almost $19 billion in revenue. And it comes as others prepare to potentially list on the US share market, like AI players Anthropic and OpenAI. So what's the rush and why the hype? To find out more, including the risks, Stephanie Youssef spoke with Datt Capital Chief Investment Officer Emanuel Datt.
Is it all hype? What do investors need to know about this segment of the market, and to what extent should they approach it with caution?
I think that ultimately investors need to be very conscious about any investment they make. And I think for me, when you make an investment, you need to be or have a high level of confidence that you're going to earn a return on your dollar. Otherwise, why don't you just keep it, in a term deposit, let's say, or a bank account where you will be almost guaranteed that money back with interest. I think that ultimately this situation is really driven by awareness. And I think that these models ultimately, from a financial perspective, are very heavily subsidized by their investors. They're actually loss-making, and burn huge amounts of money, or have burned huge amounts of money in the past on training the models to respond to human interaction and on human interaction itself. I think the question that investors need to ask themselves is that, sure, we've seen, tremendous growth over the past 3 years in AI and the revenues of these AI companies. However, that growth has been accompanied by very significant losses when it comes to cash flow. And so the real question, I think, for investors here is, A, will the top line revenue continue to grow at a similar pace, or at least a strong pace? And will these models ever become profitable? That's, I guess, the pertinent question when considering sustainability of any business model.
When talking about those patterns in the past, have there been any lessons learned from the past?
Yeah, so I think that we've seen similar sort of instances, for instance, in the dot-com era, where the internet was the latest and greatest technology at the time, and it was in a similar sort of set of circumstances, I believe, in the sense that the awareness of the internet was very high. There were a large number of users, and it had been adopted by that time by most of the mainstream. However, I think that the key question at that time, as I recall, was what happens now after everyone's already adopted it? That's probably when reality sort of starts to kick in, that, well, how do you finance, the market's appetite to finance loss-making models or perhaps companies without a sound business model. Once those first question marks start to appear and capital becomes more difficult to raise, I think that is typically the peak, and that's when you tend to see the tide going out, so to speak, and then you really find out who's been swimming naked, as they say.
Elon Musk's SpaceX is planning to raise $75 billion worth of shares at 135 apiece. That would make it the biggest IPO in history at $1.75 trillion. What's your take on the IPO and the implication for investors?
Yeah, look, I think that SpaceX is a company that's been around for many years. I think that the IPO valuation of 1.75 billion US, or trillion US, I should say, is really extraordinary. From my understanding, it has revenues of about 18 billion US, so that makes it 100 times revenue that this company is being valued or floated at on public markets, which is extraordinary to be to be frank. However, I should also mention that the company does appear as if it's pivoting its business model away from, its past focus on space exploration, hence the name, and it seems to be moving into another sort of hot arena in terms of providing AI compute, which is effectively one of the infrastructure layers of provisioning AI and making it available. That's a valuable sort of layer in the whole cake, but I think that investors really have to. It's almost like buying a lottery ticket, right? If it turns out really well, perhaps it may be justified in the fullness of time. However, I would probably say that I have some skepticism around buying any business at 100 times sales, especially at this sort of scale where huge improvements are much harder to make in terms of relative to what is clearly a very large valuation base. So that's my position, I guess, on this IPO at this time.
Australian retail investors have the opportunity to invest in SpaceX. Is that unusual? And why do you think they're doing that?
I think that it's highly unusual for a US company to be attempting to raise money off Australian retail investors. And I believe Australian investors are not the only ones being sort of targeted for this raise. I think ultimately what it comes down to is the fact that the sum being raised is so enormous, being $75 billion US of fresh funds needed. And but also, I guess what it does play to is the awareness and personality that Elon Musk has fostered and an awareness of his persona over time, and really providing those who are strong believers in his mission to participate in some way. I would probably say for the average mum and dad, it's probably stretching your arm beyond your sleeve, as they call it, and it's and also the fact is that this particular IPO will not be listed on the ASX, so theoretically it does, you know, sit outside the Australian legal system, which can be an issue in many ways. So I would probably say that this IPO is for the brave, I would say, and those with the sort of risk appetite to be willing to hold, US stocks in their portfolios for the longer term. So I think that's very much who this IPO is targeting.
So finally, where do you see the value for investors?
I think that the value for investors at this point in time is in our local companies. I've mentioned a little bit about the big emergence in AI and the availability of these technologies. I think that the very obvious beneficiaries of this situation are Australian technology companies in their own right. We on the ASX are very lucky that we've got a smorgasbord of tech companies to choose from and choose to invest in and support. And I actually see a lot of value in the technology space, which has been sold down heavily on fears that this AI technology could supplant already existing technology. However, that's all also ignoring the fact that, a lot of these incumbent technology companies have access to proprietary forms of data and have very real, clients that are paying them for the utility of the services that they provide. So at a high level, I see a lot of value in Australian technology more broadly.
That's Stephanie Youssef there speaking with Emanuel Datt from Datt Capital. Let's go to the Australian share market now, which fell today. The S&P ASX 200 down 1.1% to 8,686. That's as the miners took a hit. Fortescue down 4.1%, Rio 3.3% weaker, BHP losing 3.3%. Also, the banks down across the board. Utilities, healthcare and consumer staples did well. For more, I spoke with Robert Talevski from Activam Group. Robert, quite the sell-off on the Australian share market today. Why and how are investors now feeling about the protracted war?
Yeah, thanks, Ricardo. Look, the Australian share market was down today, driven by material stocks and the sort of renewed Middle East tensions there. The ASX was down around about 1.5%. Miners were down, and all the major banks were also down, sort of in that 1 to 2% range. Overnight, US markets were also down, coming off sort of recent all-time highs, actually. The S&P was down 0.7%. The tech-focused NASDAQ was also down 0.9%. This was mainly driven by, obviously, renewed tensions in the Middle East after Iran attacked Kuwait with some drone strikes there. Semiconductor and software infrastructure firm Broadcom also shed 11% after its forecasts missed expectations on weak software sales. Oil spiked, as no surprises there, higher on news of the attacks, currently sitting at around US $98 a barrel.
Can we focus in on the miners that you mentioned? They were hit particularly hard, especially the likes of BHP and Rio, which hit records yesterday. Run us through why and what's your take on the sector?
Yeah, so Fortescue, BHP and Rio were all down in that sort of 3 to 4% range today. Look, iron ore shipments from Guinea's Simandou mine to China recently soared. This is one of the world's largest undeveloped high-grade iron ore deposits. I guess the concern for investors in these large miners is that sort of Simandou could add a large value of new supply into a market where demand growth is already slowing.
Any other local company news catch your attention today?
Yeah, healthcare stocks, CSL and ResMed were up in that sort of 1 to 2% range. Look, opportunistic sort of buying the dip investors' interest following, I guess, a recent sort of brutal sell-off in the ASX healthcare sector.
I'm hesitant to add to the real big hype that we're starting to see around the space economy, right? Especially with SpaceX, which has detailed its IPO today. What's your take? Yeah. And is it something, for example, that you'll be taking part in?
Yeah, so SpaceX detailed sort of after hours last night its IPO share price at $130 a share. Valuation currently sitting at 1.7 trillion, with only around 18 billion in revenue. I guess the need to sort of practice some caution here. An inflated valuation is a concern for many investors, including myself. The stock will be tightly held for at least 2027, which I guess provides some comfort and sort of, I guess, might sort of avoid too much downward pressure on the stock. But we could see a bit of that downward pressure in the short to medium term. Look, we expect to gain some indirect exposure via some of our global equity managers, but it will be at a minimum.
Okay, and finally, what are you telling your clients right now? Where do you see the opportunities for investors?
It really is the sort of the simple concept, just remain invested. Look, global share markets are up 7% in the last 3 months, even during this sort of very sort of highly volatile period. Not so good for Aussie equities, sort of down around that same percent, if you like. Emerging markets are up 8% over the last 3 years as well. Now, the average balance fund is still up 10.5% for the 12 months. So we're looking at another financial year of double-digit returns for balanced and superannuation investors, really. Also, have enough exposure to investments where, you know, some will do well during sort of bad times, I guess. So being well diversified makes a lot of sense. And look, it's time for private equity to shine after sort of a couple of years of tough times. You know, we should see some good amount of IPO, I guess, listings, which should unlock a lot of value and clear up a lot of the IPO backlog that we've seen in the recent years.
That is Robert Talevski there from Activam Group, and he wraps up the podcast for this Thursday. Give it a like, a review, and subscribe if you enjoy it. Don't forget you can watch On the Money during the weekday edition of SBS World News. That's at 6:30 weekdays on SBS. The podcast returns tomorrow. It drops after the market close, and I'll catch you then. This SBS On the Money podcast is provided for informational purposes only and should not be understood as constituting advice or a recommendation. It is not personal advice and it does not consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decisions.